to the Capital Discussions Roundtable. I'm Tom Nunemaker with our guest, Randy Schwartzenberg. Before we get started, a quick disclaimer, the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And just again, this is for educational purposes only. So with that out of the way, I'll change the presenter over to you, Randy. So Randy, welcome. This is the first time I've been a roundtable speaker, so maybe good to introduce yourself a little bit before you start your presentation.
Sure. Actually, I have that in the presentation, so I can do that at that. I can go ahead. Can I?
You should be able to share your screen now.
Okay.
There we go. It's coming up. And we see it, the White Rhino.
So everybody can see the White Rhino.
The White Rhino. Yep.
Yep. Okay. First of all, the White Rhino, white rhinoceros, is a mistranslation from Dutch to English. It should have been translated as wide because of the mouth, the width of the mouth, but it was translated as white. Of course, that looks pretty white to me.
It does.
Yeah. Okay, about me, and just ask any questions if you'd like at any time. I'm 62 years old, or young. I have 2 children and 4 grandkids, and obviously grandkids are the best thing ever. Business experience, I've been in retail, headhunting, publishing, trade show management, and at this point in time, I lead a nonprofit company in the trucking industry called Trucker Buddy International. And if you're curious, you can go to that website. We've been around 23 years and have over 60,000 elementary school kids in our program that's located in all 48 states, Canada and Europe, and even in several other countries. Options experience, I attended InvestTools seminar in the 90s and was hooked. 3 green arrows go long, 3 red arrows go short. Isn't that simple?
Kind of like Wise Trade. Remember that?
Yeah, exactly. Right. So, and of course, you would make millions of dollars doing that, just 3 greens and 3 reds. It's not quite as simple as that, though. So I took some option classes with a group called Spread Trade Systems, which actually had some pretty good informational or educational materials, but that is now a different company because of some other issues that took place. In 2008, I joined Sheridan Mentoring, and learned a lot about trading there too. But I tell you, the one thing that I learned probably most about from Sheridan is I developed some friendships within the community, and now we have about 5 or 6 guys that every day Skype with each other about what trades we're doing, ask advice from each other, kid, cut up, talk about politics a little bit, and we've really developed a really good friendship, and it's really helpful for you to have people that you can honestly ask honest questions from. So if you're new to trading or even been trading for a long time, I would recommend that you find some people that you can that you can take advice from and give advice, and I think it really helps you in your trading career. Okay, White Rhino. And excuse me for coughing, but I have a cold, so I'm trying to work through this. I love butterflies, and I've traded them for a long time. But the problem with butterflies is that you have risk on both sides. So typically, you would set up a butterfly right at the short strikes, and equal distance because you think, well, that's protecting both sides. And then all of a sudden, this happens. You have a large gap, and you've hit your max loss, and you're out in one day, and you're thinking, oh my gosh, that's horrible. So you go, I'm not going to do that again, so I'm going to put it with flat deltas, which, based on the pricing of the options, should be right in that area. And you think, well, shoot, nothing can go wrong with that until that happens. You have a big gap down. And then at that point in time, you're like this. You're stuck. And actually, that's one of my grandkids. He climbed under the chair, and he couldn't get down. And so you're kind of stuck between getting in the chair and being on the floor. So the solution, I think, is to do a broken wing butterfly. And that's to have has to have a shorter wing size on the upper side, and that gives you room to move on the downside. It flattens the T0 line, and it also gives you room to move on the upside too. And so I was trading that for a while, and it worked well. But the problem is that whenever the market began to grind up for 100 points, then you get into a negative theta problem as it goes further up the right hand side. And so you have all kinds of options. Then you can reverse Harvey the upper puts. That pushes, the problem with that is that pushes the price further away from the tent, which means you lose out on some decay. It also means that you're going to be in the trade a lot longer because you have to wait for the decay to start happening and pulling the price up in the tent. And if it keeps going up even more, then you basically aren't going to be able to hit your profit goals. So one day I was watching this group right here, and Brian showed his Rhino trade, and he was using a calendar along with a broken wing fly as an adjustment. And so I found that very interesting because that kind of solves the problem of these tremendous grinding moves up, which cause havoc to the trade, to just a regular broken wing fly. I personally don't like calendars. I used to trade calendars a lot. I just don't like them. I had a market maker tell me that the easiest way to manipulate the market is using two different expiration dates. And so I guess that's my White Rhino is turned into the calendar haters Rhino. And so and then now most of the slides that you're going to see are with 30 contracts. You can and the reason it's 30 is because I do this trade with 30 contracts in an account. I wanted to show live trades instead of just made up ones. And so you can just cut this down into 10 contracts. You can do a 6 or an 8. You can't do it's hard to do a 2 contract because you don't have enough power in the adjustment butterfly to help you. So I would say probably 4 is probably the absolute least you can do. But just so everybody sees it and they don't get worried about the margin that's being used, you can take all the margin and divide it by 3. Now, Tom, I can't see any questions, so
no questions yet.
Okay, cool. This is actually a pretty simple trade, and it's because I like to keep things simple because when the market's moving fast, it's hard to make adjustments when things are complicated. Okay, so that's kind of the way it looks like, and that's why it's called the Rhino. It's also I named it the White Rhino because when we were discussing it on some of the Skype groups, there was a lot of confusion between the one that I was doing without using calendars and the one that Brian was using, which works really well. Brian's trade works really well. So I renamed it the White Rhino just to delineate it from Brian's trade. If you want to get into more details on it, I have a little website, and you can go to that website right there, and that page, and it has all the rules for what we're talking about, along with some other detail. Typically, I place these 60 days out, which is I usually do it on expiration Friday, 60 days out, and I try my best. That doesn't always happen, but I try my best to make all adjustments at the end of the day. The nice thing about this is that the T0 line is really flat, so you can wait till the end of the day to make sure that you don't have reversals when you make your adjustments. So and it doesn't hurt you as bad. The typical setup's 20 points in the money with 60-point downwings, and then I've moved the upper wings up and down so that I get a slightly negative deltas, sometimes with typically with about 8 deltas, minus 8 deltas. Okay, and so that's what it looks like. As you can see, that this is a 10 time right here, and so this one has minus 6 deltas. And the reason you need negative deltas on this is because I know Ron talked about weighted vega, and if you have positive deltas, then that counteracts the weighted vega, because this trade does really well when it's going down. And sometimes you can actually get out of this trade in just a few days for pretty close to what your target profit is. But it needs to have negative delta. Okay, profit targets. I may be a little bit unique, but I don't like percentages. First of all, you can't spend them. Take a percentage to the grocery store and watch their expression. You can walk in and say, I want to buy something with 100% profit on my 50-cent investment, and what does that tell you? It doesn't really tell you much. So I don't particularly like percentages. Another problem with percentages is you can't depend on them. The vols change from trade to trade, and that increases and decreases the margin. And of course, to come up with a percentage, you have to have a denominator. And if your denominator is different every time, then your percentage is going to be different every time, or your profit's going to be different every time to get to a set percentage. Also, adjustments increase or decrease your margin, which changes the percentage profit or loss on the trade. You also can't project them. So you say, well, I want to get 6% on every trade. Well, 6% of $10,000 is a lot harder to get than 6% on $20,000. So that raw number is completely different. And so I like to shoot for a target profit dollar-wise. And this makes it very easy. I can adjust this if I want. I can change it. And you can also do your money manage it by reverse Harveying the trade. So if you have a smaller account and you need to save the margin in it, then before you make an adjustment, just reverse Harvey to get more of your margin back, and then use that same margin that you got back on the adjustment, and that keeps your margin dollar pretty close to the same. So I usually like to get $1,000 after commissions for 10 contracts. And then you can take the $1,000 to Vegas and turn it into 1,000,000%. Max loss on this is about $2,000, and that really depends on the location. If I'm at $2,000 and I'm right in the middle of the butterfly, the main butterfly, I'm going to leave it on, because a lot of that is a volatility loss, and especially if my deltas are pretty flat, then a lot of times you'll take that off at your max loss, and then the next day you would be back up to, $1,000 loss, or sometimes it could actually bounce all the way up into a break even or a profit. So if I'm $2,000 and I'm outside one edge of the tent, then I would take it off. But if it's substantially under the tent, then I would leave it alone. Adjustments. My adjustments are 10 points past the upper put. Then I would add, on a 10 time, I would add the 6 to 8 broken wing butterflies when the price, and move those butterflies 10 to 15 points past the money, or in the money, to create the horn, kind of like you see right there. I still try to keep my deltas slightly negative. The wings on the adjustment broken wing fly, I typically shorten it a little bit, so it's down 50 points, and then I move my upper wing to adjust my deltas. Okay, so sometimes it'll look like that, and as you can see, my deltas are about -8 right there, or -6, and I'm just waiting for the theta to work in, or the vols to come out, so I can get my profit. Okay, some people ask, well, what happens if it reverses? What do you do? How long do you leave the horn in there? And so what I do is I gradually peel the adjustment broken wing butterfly off as it's moving, as it's reversing. And so I may take off 2 or 3 at a time, or 4 at a time, basically just trying to keep my deltas in line. If your deltas are good, then leave it on, because there's always a chance it'll reverse back the other way, and then you're going to have to re-add it back again. So just look at your deltas and just try to keep them slightly negative as you make these adjustments. Okay, and that's what it looks like right there. Actually, it was 4.5 delta. So I would start as my deltas get higher, I just start peeling off the butterflies, the adjustment butterfly. If it continues to grind up and it goes past the edge of the tent, like if it goes past the tent, then what I would do is I would condorize the adjustment broken wing butterfly, just like this. And typically the drawdown on this is not that great. I mean, right here, this is a three tranches, and it's only down like $1,500. And the profit and the loss bounces up and down a lot. So that's what that looks like. You see, I'm still a little bit negative delta, because I'm worried about a reversal. Also, the volatility, the vols help you as you're going up. So having a little bit negative delta doesn't hurt it. Okay, so let's say it continues to grind up, and this is actually the shape of one of my trades right now. And so what I do, because my April trade, I think the price of SPX has gone up 170 points since I placed it, and without hardly any reversals. And so I just continue to roll the verticals out from a condor standpoint, and then finally I don't have a lot of profit in the tent, in the broken wing butterfly or the condor, so I started peeling off the verticals on the upside just to keep the deltas flat, and also to make any loss that I have to take on it on the upside less and less as I keep reducing the verticals. On this trade, I did a reverse Harvey to drop my margin, because anytime you start condorizing or rolling the verticals up, it's going to cost you more margin. And that's what that looks like. So as you can see, I have -2 deltas. The worst case scenario here is that if it continues going up without me doing anything, then I would lose $1,300 on a 3 times contract, or 3-time contracts, or tranches, sorry. And my profit was $3,000, so I think that would be a probably legitimate loss to take if that's what I took. I can always continue to peel off more of these verticals as it goes up, but I just want to make sure that my deltas are not getting too negative by doing that. Okay, so that's the upside, and that's just what you do, and then you just wait and wait. Obviously, I'm going to probably have this trade on probably until, expiration, but it's a long ways away from any trouble, and I'm just going to continue to manage it. And I might get lucky and it actually go down for once. Okay, on the downside, this is like a little bit of a circuit breaker for this trade, and it works really well. So if you're watching this on an intraday basis, if the SPX goes down 1.6 standard deviations in one day, and you can do 1.5 or 1.7 or 1.4, whatever you want to do, but I like the 1.6. If needed, and you're not going to always need to do this, just buy a put to cut deltas to slightly positive or flat. This works really well. It keeps you from getting in the hole from a standpoint of when you go, especially when you go past the short strikes. It'll keep you from going really negative and then getting stopped out on your max loss. If the market reverses when you put that on, then just take a look at the deltas and try to keep slightly negative deltas as you either take it off or roll the long put that you have on there. If price goes outside the tent, then close the current broken wing, the large broken wing fly, and replace it at the normal setup. Depending on the amount of movement the market has made when you do that replacement, then you may decide that instead of doing 20 points, you may do 10 points or 30 points, just depending on your market bias. Every time I did it in backtesting, I always did it 20 points. So this is an example. Like yesterday, we went down at 1.6 standard deviation, and as you can see, the deltas are still 1. It went down 20 points, and I'm down $300, which that bounces up and down. So I didn't add the long put on there because I didn't need it. Backtesting. I backtested 2014 and 2015 with the 10-time contracts, 1 tranche. And in the backtesting, I had 23 winners and 3 losers. Average winner was a little over $900, and the average loser was $500. And the reason that is the way it is because a lot of the losers, because you're repositioning, are up to the upside. And so if you just continue to manage this trade on the upside, it'll never rip your face off. The total average percent for the whole 2 years, it was about 4% on margin. And the margin, of course, like we talked about, the margin depends on the vols. So the margin on this trade for a 10 times contracts was at 12,000 at one time, and at most about 21,000. So, so that's basically 4% overall. Live trades, I've been trading it since November. In November, what happened is that the first 3 or 4 days of the trade, I was up $800, and so I closed it and I repositioned it, and about a week later, I was up another $800, and then I closed that, and then about 30 days later, I closed it for another $800, and so within 30 days, I made $2,400 on the trade. That's kind of unusual, but I mean, I could have just closed it and then just waited 50 days or 55 days, but I didn't. But I wanted to go ahead and reuse that money. December was about $1,200. That January is about $1,000. February is about $1,100, and March was about $1,000, a little over $1,000. February and March, I had to replace February twice. It went past the tent twice, but still made $1,000 per 10 times or per tranche. It's just a resilient trade that is if you manage it properly, and it's not really hard to manage. If you manage it, then you're never going to take just a huge loss that's going to just completely devastate your account. Starting margin, like I said, depends on the volatility for 10 times, and I did all trades 10 times in the back testing, and that's what I do also when it comes to live. When your max margin should be around about $30,000. That's a maximum. That's absolutely maximum. But like I said, if you just do a reverse Harvey, and a lot of times you can just do it 5 points. That will pay for whatever adjustment that you make from a margin standpoint, and that'll keep your margin very low on this. And that's the back testing for 2 years. And all this is on that link that I gave you. Many times on this, I could have gotten out for $800 or $800 or $900, which probably would do in many cases live trading. But I wanted to really stress this trade, and so I absolutely tried not to get out for anything less than 1,000. There's a few cases that I did it just because it happened to be in a particular place on the graph. And also in the back testing, there were many times when I probably could have closed in back testing this for like $1,200 or $1,500, and I took less of a profit on it to make sure that it seemed that the profit that's showing up in back testing could be done live. Of course, you guys, you knew that you weren't gonna get out of here without seeing my grandbabies. And of course, the little girl there is the only boy out of all her cousins, eight or nine of them. So she's spoiled rotten, of course.
Cute kids.
Okay. Yeah, thank you. So now some people have asked me about a service. Are you going to do a service? You're going to do a service? I don't have any plans to do a service. I've already got a full-time job, and I also trade almost full-time too. So, but if you find success using the White Rhino and using this technique, and you want to talk to me about it, then and you want to help, then donate to Trucker Buddy International. We're a 501c3 nonprofit, and we do a lot of good things for school children. And that's it.
Well, great. We do have some questions. Let's see. Let's back up. Raul asks, when do you completely take off the upside of the condor? Or do you ever do that?
You mean the adjustment condor?
Yeah, I guess it's the adjustment condor, right?
Well, I may never do it, or I might do it quickly. It just depends on how quickly the market's moving, reversing. So, but typically I don't do anything until it passes the long put of the main broken wing butterfly, because I don't want it to reverse back going up and then have to re-add it. So typically I'll just leave it. I don't worry about the sea of death in there until I'm really late in the trade, like the last 7 days till expiration. Typically most of these are off. Well, let's see here. Here we go. As you can see, there's days in trade right there. Some of these are off in 4 days, 6 days, 7 days, 12 days. Typically, the ones that grind up are the ones that you stay in for a long time. Just because the decay of that condor or that broken wing fly doesn't take place till later in the trade. So I don't take it off because it's protecting me on a reversal going up until I start getting negative deltas. Positive deltas going down.
Makes sense. Hans asks, do you consider moving the main shorts? Like, do you ever reposition the whole thing instead of adding like an adjustment butterfly or condorizing?
Well, that's kind of like an M3, right?
I guess. I know the M3 has those long calls.
I'm talking about, but to adjust it,
I mean
typically
the repositioning, yeah.
Yeah, you just roll the shorts up. We should roll the whole, either the shorts or the whole thing or the whole vertical. But no, I want to keep this as wide as possible, and I'm sure that could work. Anybody that wants to try this trade or wants to change it, then back test it. I think before you even decide that you want to do this trade, you need to back test it at least a year and just see how it responds. But rolling the shorts may work. I just didn't back test it that way.
Fair enough. And then
and it's hard to argue with the results too.
Yeah, those are good results. 23-3. Robert asked about the 1.6 standard deviation, and Ralph said it's for a single day, which I think is right, isn't it? You're just doing a 1 day.
Right.
Yeah, 1.6 standard deviation.
It's a 1 day. And a lot of times that's depending on the volatility at the time, that's about 20-point move, maybe 25-point move.
Okay, and then Ron Bertino says, when you take it off for an early $800 profit, do you wait until you reposition, or do you reposition as soon as you took off the old one?
Well, it depends. It depends on where it is in the graph. If, all right, let's say, let me get back to here. Typically, that's going to happen when you don't have an adjustment on. But so let's say you're at $800 and you're right at that position right there, then no, you just leave it on. But if it's substantially to the left or substantially to the right, then I would take it off and reposition it at the end of the day. If it happens in the morning, I would take it off, and then I would at the end of the day I would reposition it where I normally would start the trade. Hope that helps.
Okay, see, Bodan says, Randy, single most important risk management rule you learned from backtesting in actual trade history. So what's the most important risk management rules that you learned, I guess, is what he's asking.
Well, that 1.6 is pretty good. That 1.6 will keep you from, getting your face ripped off to the downside.
Yeah,
So
I think that's
that's
good for almost any trade, really.
Oh yeah, you could do that with almost any trade. As long as you have, as long as you're getting positive deltas, then you could do that almost any time.
And Chuck
And
says,
also,
okay.
If it's at the edge if it's at the bottom edge, the left-hand edge of the tent, and you're 5 points away from being outside the tent, then you've got to make a decision whether you want to close it and reposition it or just take the chance that it may not gap way down. If it reverses and starts going up, then you're going to get out of this trade really quickly. So when it comes to risk management, do you go ahead and wait for it to get past it? I waited on the back testing to go past it. So yeah, I don't know. I think a lot of it depends on your deltas and what your risk tolerance is.
And just a question, when you add, say, a long put, do you have any guidelines of when you take it off? Like Dan Harvey and I typically will if we put a long put on, say when it gets to 75% of what we bought it for, on like a reversal, a market whipsaw, then we'll have a good till cancel order and to take it off so that the net cost isn't as much. You're just trying to control that risk to the downside. Do you do anything like that?
Yeah. There's also another way to do it, and that's to wait to the candle that you placed it, and it goes past the candle that you place it or the day that you place it. But if you take it off, if you take that put off and you're going to have plus 80 deltas, then is it worth taking it off just because it went to that point?
Yeah, so, it's all situational. Yeah.
Yeah, I think you just have to look at it and say, when I take this off, what's it going to do to my trade? And so what you could do is, if it's 80 deltas, you could roll it and turn it into, 30 deltas. Mm-hmm. And then that way you could you still have it on, but it wouldn't be as powerful. So yeah, there's a lot of different ways that you can manage that long put.
Chuck asks, is the starting broken wing butterfly width always the same? And is anyone else trading this like you are?
There's a few people that are trading it like me. No, the width is different. Could be different every time because the bottom, the downside is always 60, but the upside could be 45 or 40 or 55, just depending on what the deltas are when I place it. So I'll put it into like 1, or you can put it in toss and just play with it. Just kind of move that upper wing 5 points down, 5 points up, and just see what kind of deltas that creates. And when you get to the point that it's slightly negative, like 8.7 or 8.6, then that's where it is. So the upper wing is not set at any kind of width.
Okay, so let's see. That question to scroll up. Kevin said, any reason you did a 45 and 72 days to expiration?
Because sometimes that Friday, there's 2 months in a row. There's 4 Fridays in a month, and so it just depends on when that expiration Friday is.
Okay, and Brian asks, is this Reg T or PM?
This is a IRA.
So pretty safe to say, Reg T.
Yeah.
I don't think PM is going to be too much different than that. Yeah. Let's see.
Yeah, and I don't, I always judge it. I don't judge the trade. I have a PM account, and I trade this in there, and I have been doing 50 contracts, 30 in one and 20 in another, in the 20 in the PM account, and the I don't even look at the PM margin. I look at just what the maximum loss is.
Okay, Mary Ellen says, do you always use put broken wing butterflies for your adjustments to the upside, or do you sometimes use call broken wing butters? Any difference in fills?
I only use puts.
Okay. And
I mean,
Daryl asked,
I guess you could look at the difference when the pricing, but I guess I'm not that sophisticated enough to do all that, or maybe I'm too lazy.
well, personally, I would probably look at the out of the money butterfly first. So if you're going up, maybe the call might be cheaper with less slippage. Just compare both of them.
Yeah, it was back tested only with puts.
Okay. Daryl did ask if this is being recorded, and yes, it is. Michael says, what is this chart and where from the risk graph? This is from OptionNet Explorer, it looks like.
Right, this is.
Mike asked, does Randy use any kind of technical analysis to help with market direction, and what are your favorite technicals?
Oh, gosh. In back testing, I use zero. I didn't even look at the price chart. But I guess if I'm, I think you have to look at price as the biggest technical analysis tool, because if we've gone down, what was it in February when the SPX went down like 200 points or something like that?
Yeah, it was about a 10% correction.
Yeah. Well, you know that sooner or later it's going to bounce up. So why if you're going to reposition it or start a trade, then take that into effect. I mean, but I wouldn't move it more than 10 points either way, because you just never know. You may be wrong. But I don't think you really. I mean, I think that'll help you. I just don't know that it's going to make or save the trade.
Ron asked, you mentioned you like to keep slightly negative deltas, but do you have a normal range of deltas per tranche?
For the beginning of the trade? The
Yeah,
beginning of the trade.
I know, like John Locke, for instance, on the M3, he's got a range for his deltas on the M3. Do you have something similar to that for yours?
No. On the setup, I think the setup is probably more important, and so I try to keep it. Like if it's a 10 contracts, I think you should keep it about 5 or 6 or 7, something like that. When it comes to when you have the adjustment out there, I think you just keep it about the same thing. That's what I do. I just want to be slightly. I don't want to be overly, and I know that's hard to. Everybody wants set rules that say, it has to be X delta. But, sometimes you can move the upper wing 5 points, and it'll move it from a negative delta to a positive delta. And then you move it 5 more points above that, and it could be, negative 10 delta. So I think you just find the best opportunity that you can find with what the market's giving you, and just keep it slightly negative, as slightly negative as you can. Sometimes I've done them and it's like 2 delta, negative 2, because I would have to split my strikes to try to get it to perfection. So just try to come up with some kind of a, negative delta, but not have something that's really, really real negative. I don't know. That's hard to say, isn't it?
Yeah, it is.
Yeah. And
okay.
back test it. Take it and back test it for a year, and look at how it performs. And I think you'll see that whether you're 8 delta or 7 delta or 6 delta, it's not going to really make a big difference.
Let's see, we're getting close to the end here. Raul asks, what happens if your T-post zero line is not flat when you start? That is, do you move your butterfly around to initiate the trade?
Well,
I mean,
no,
you want a slightly negative delta, so it's not quite flat.
well, yeah, it's never going to be completely flat, but if you're 60 days out, then you've moved and you have one side that's shorter than the other, then you're going to come up with a really flat line. Plus, look at the gamma in this. It's a 10 contracts and it's 0.32. So
yeah, that's a good measure of flatness is the gamma.
Right. So I mean, nothing's going to ever be completely flat, and you don't really want it completely flat because then you lose out on price movement, and you don't want it to be positive. You don't mind if it's slightly negative because when the market's going up, the vols are going to help you even in a lower vol environment. It's still going to help a little bit.
Yeah, let's see. Greg asked, do you use teenies or any other type of downside gap hedge?
I don't. This thing is a negative delta setup, and my teeny is the 1.6 put that I put on there.
No, and you have a lot of room too, so it's going to take a while before it gaps all the way through to the bottom of the tent.
Oh yeah, it's going to take. It's going to probably take 80 points maybe to go down there.
Okay, and Daryl says he may have missed this, but do you enter with price guidelines like the road trip has $1.25 or less, or with technicals like on a down day or RVX or VIX considerations?
No, in backtesting, I just took whatever on that particular day. I'm sure if you could wait around and find a day where the price is better, that would help you. But I wanted to stress this trade and just put it on at a certain day and time and see how it did. If it's a down day, I don't think it really helps or hurts this trade either way. At least I haven't been able to see it. I mean, obviously, if it's a big down day, then you might get a little bit better price on the fly.
That's what I found on the road trip, and probably for most butterflies. If the volatility is going up, you're paying less for that butterfly.
Right. Yeah. So I mean, it'd be good to wait for a down day. I mean, you don't have to do it on Friday. You can do it on Monday or the day before. It's just
get a good move. Take advantage of it.
Exactly. Right.
All right, Randy, it looks like we've exhausted all the questions. And as Peter said, great presentation. Thank you for sharing.
Yeah.
So many thanks for all your efforts in putting this together and presenting what you've done. It's a great job.
Well, I hope it's answered some questions. And like I said, there's a lot of different ways. Like here in Alabama, we say there's a lot of different ways to skin a cat if you're into that.
That's right.
So we'll. I mean, Brian using calendars. I'm sure it works great. And I do the road trip a little bit, and I'm also right now testing the 30-day version of this, and it's working pretty well. Just to be able to reuse the money and not have to overlap trades.
Right.
So there's a lot of different ways to do it.
All right, so thanks everyone for sticking with us to the end, and I'll get this recording processed as soon as possible and get it in the library. And once again, thanks, Randy, and you're welcome back anytime you have something to share with us.
Thanks, I appreciate it.
Okay, thanks everyone. Have a good week.